I told you on our last week when we had Inauguration Day, that week, again, the tariffs got delayed until February 1st. Today we had this wild ride. Are they on or are they off? Reuters posting a fake news story about the tariffs being delayed. We could see a sell-off with that. More about that in a second, but going forward, at least the White House is saying right now. Market had shrugged it off. I told you again, we're probably going to see volatility surrounding the tariffs, then eventually go higher, and then see more volatility surrounding the tariffs. Gap and trap today as Wall Street surrenders gains after the White House confirms that the tariffs are going to be starting on Saturday, February 1st. I think that will give us a bigger sell-off. We'll be talking about that. I warned you about this the previous week there, the week of Inauguration Week. Could see volatility with the tariffs and even go higher and still get more volatility. See volatility surrounding the tariffs in 2018. It could create a top because of an inflation freakout. More about that shortly. Please support the channel with the link directly below that allows me to be able to provide you this information. If you could take a moment to partner with me in supporting the channel, I would really, really appreciate it. Most YouTube channels make their money by sponsors. I don't choose to do that. I don't want to sell you anything. But if you could take a moment to do what you can to help out, I would really, really appreciate it. Just put all the information out there for free. I show you the charts that I look at every day. If you find that helpful, please take a moment to partner with me. I do need to hear from you in order to make it work. So please let me know you want this information, you like this information by supporting the channel today. For your consideration for that. Watch the video all the way through. Important stuff coming down. Yeah, I don't think the blow off top is done yet, but I think that there's still more downside. And again, I've been talking about these tariffs possibly creating more volatility in the market and eventually getting an inflation freakout at the top. I think that could be it. We didn't flip to a bearish reversal of conditions yet here on the S&P daily. I think we get a bigger pullback. I'm watching the Fibonacci's. I'll talk about the NASDAQ in my next video. Work in the Dow, the double top on the Dow and the Russell. Again, we could still get a bearish reversal of conditions here and end up getting a bigger pullback to fill some of these gaps that I've been talking about. Watch the video all the way through and you'll have the information you need going into next week. I talked about this earlier in the week that we could see a rebound off of the 50-period moving average. We have the inflation data come in line with expectations, but we also have the tariffs that are now going to be implemented. Maybe by the time you're watching this, it's Saturday and we've already had that take place, but it's going to happen. Got a bullish falling wedge right here at the 50-period moving average on the 10-year yield. Again, it can go up and get a lower high. We still may end up getting a double top. That's still possible, but I still think that once we pull back, lower backtestable flag on the S&P, I still think we'll end up going higher. Believe we're going to have an inflation freakout. Inflation data rising with the tariffs and everything. Have the bond market, the Fed, and the herd all freaking out on inflation. We've seen that a little bit with the Fed and the bond market. I think we're going to see inflation freakout 2.0 in the not too distant future. Watch the video all the way through, but I think we're going to bounce. We're getting this rebound off of the 50-period moving average here with the 10-year yield, suggesting we get the bigger pullback that I continue to warn. I don't think the low with the DeepSeek sell-off on Monday was it. Watch the video all the way through, and you'll see why. I told you earlier in the week, again, we still may get another leg down. We got the tariffs coming in on Saturday, on February 1st. Close out the month of January. And again, we had a gap higher to fill the DeepSeek gap that we had on Monday, and gap higher to fill that was a gap and trap, and we sold off. Initially had a rally, and the rally was given back. The Dow was up or down, 337 points, down 0.75%. S&P was down 0.5%, down almost 31 points, still holding above 6,000, but at 6,041 rounding up. The NASDAQ down 0.28%, the Russell down 0.86%, the VIX rose by 3.72%, back above 16, just under 16 and a half. Now, as we rallied up to fill the gap, and we were rallying hovering near the highs of the session. I posted this on social media. I talked about Trump's tariffs tomorrow. And I put on social media tomorrow, on February 1st, Trump's tariffs on China, Canada, and Mexico start. Is it possible we see another sell-off surrounding this event next week if the pullback isn't done? Which, again, I continue to believe that it's not. I wrote that Wall Street loves Trump's economic policies, but they hate his tariffs. That's absolutely correct. Why do they hate his tariffs? Because they believe that the tariffs create inflation. They do not. I'm not necessarily a fan of Trump's tariffs, but they don't create inflation. Inflation is caused by an increase in the money supply and excessive government spending, not by tariffs. Who influences the money supply? Guess who? The Fed. They're running around pointing fingers at everything that's going to, like the BoogeyMan. They're going to create inflation when, again, they're policies that create the inflation along with crazy government spending. We recently had all this inflation here. We had that back in 2018 and 19 with the tariffs. Inflation hovered just below or just above 2%. We had the inflation. Fed gave us QE and 2.0. That's inflationary. During the pandemic, and the government decided to pass out, 5-6 trillion in checks while everything was shutting down. They gave us the inflation, not tariffs. I'm not a fan of tariffs, but again, I just want you to understand, why is Wall Street selling off right now? Because of, concerns about inflation. The tariffs. Powell's so hawkish because of the tariffs. Why is the bond market seeing the 10-year Treasury note yield? Because they're afraid of inflation. They believe inflation, and a large part of it is the tariffs. Posted this, said, hey, maybe we get this sell-off in this ABC move, Trump's tariffs. A few minutes later, just not too long after I posted this, Reuters comes out with this fake news that the tariffs are going to be delayed until March 1st. They're going to be delayed by a month. But back on social media, and I posted that, and I said, okay, maybe it's not the tariffs. Maybe it's something else. Maybe we're going to have possible restrictions on NVIDIA sales to China. What's that? I don't know. Hey, it'd likely be the tariffs. That's what I posted. Come out with this fake news. And wouldn't you know it, a few minutes after that, just a little bit later, House Press Secretary comes out. She comes out a few minutes later and she says, yeah, I saw that story in Reuters. And she said she just met with the president and that story is false. It bounced on that story, filling the gap and starting to turn down. It bounced on that story and then it began to sell off once she came out and said that the tariffs are not going to be delayed, going to be implemented February 1st, this weekend, tomorrow, in the video here on Friday, on Mexico, Canada, and China. We saw the market get a bounce. Reuters fake news story that the tariffs are being delayed. Absolutely incredible. I checked back after to see if they had retracted the story. Didn't do it. I don't know if they've done it by now, but market getting another bounce on another fake news story about the tariffs being delayed. Then we got the sell-off. My initial analysis that, hey, maybe we fill the gap and we get the next leg down for wave C, hit the back test, and I posted, we're forming a bear flag pattern. My initial post about a sell-off with the tariffs and the rally into the deep seek gap up being correct. Here's a bear flag I posted before the sell-off happened, and again we got this little bounce. We went up. Here's the deep seek gap fill at 61.01. We came back. We filled that gap, went a little bit higher to this trend line right here. We formed a bear flag pattern going into the gap. The gap fill from Monday's gap lower with that deep seek sell-off. Here's the bounce with the fake Reuters story that the tariffs are being delayed, and then White House press secretary came out, said that story's false, and we got this. The market rallied, the rebound on fake news. How about that, huh? We did break down from the bear flag. We'll see if we try to rally back up into it. The 50 is moving down towards the 200, but it looks like this issue is probably going to be the catalyst, and maybe concerns about NVIDIA having restrictions on its sales to China. I thought that was so funny because I just posted that. I think we're going up filling the gap. And I talked about this a little bit yesterday about possibly the gap filling and then coming back and still getting that deeper retracement. I still think, and I keep saying it, I think the sell-off's done yet. And I think that, again, we probably still have a larger ABC move. I'll show you the charts in a moment. But I was absolutely amazed because I just posted that about the tariffs. We had the gap higher, and I was posting that on this rally up and started to pull down back off of those highs, and lo and behold, Reuters comes out with that fake news. I thought that there would be a catalyst. It would be the tariffs. Fake news came out, and I said, well, maybe it's concerns about NVIDIA. CEO is going to meet with the president, I guess, at the White House. That might be this weekend. Again, I don't know if that will be an issue going forward. Again, I believe NVIDIA's topped, as I've said, but it could go back and try to fill the gap. It's still hovering around that 200-period moving average. Maybe we'll look at it. Talked about the gaps yesterday, and I told you we could fill this gap and still go back and hit the other one, or be wrong. Maybe we bottomed over here, but I told you I don't think so. I think that we still get another sell-off. We'll be watching. We had a pretty good sell-off, and it was a gap and trap. You always want to watch a gap, see if it's a gap and go or a gap and fill or a gap and trap. Here, we gapped higher, and then we began to move in the other direction. It was a gap and trap. Gap and go, you gap in a direction, like you say you gap up like the CPI rally, and you just keep going. If you get a gap and an immediate fill. So we'll be watching. But this was a gap and trap today on the intraday charts. And again, a beautiful bear flag. Little bullish diversions giving us a bounce. Again, did we break now and we're going lower, or are we going to try to push back up into the bear flag pattern? But I think that we have a bear flag that is now to give us our next leg down here. I still believe that we're in a pullback, and I believe that we're just getting an ABC move, and eventually we're going to go make new all-time highs. We fell short of it today, going back and testing our January peak. Here it is on the 15-minute chart, and again, we rose back up, tested this level. We filled the gap at 6101. That was the deep seeks gap right there. And now, again, I think that we're eventually still going to come back and fill this gap right here. This gap is the gap of the breakout of the bull flag. This is our 15-minute chart. But again, I think that this is where we're likely still headed, and I think it's a larger ABC correction. I still believe the bigger picture is still bullish, but again, I think we're going to end up taking out this low and likely end up seeing some divergences develop eventually here on these intraday charts. But I showed you this chart. I drew this line here, and I moved it over just a little bit because, again, taking our time reaching it. But this is what I told you when we were rallying up. I predicted the bottom right here, gap a little bit lower. On the 9th and 10th, I predicted we were going to gap a little bit lower. Pardon me, drop a little bit lower and fill the gap and hit our trend line from 2023. I talked about that. We did it on the 10th, the very next day after. Talked about it for the second day in a row on January 10th. We did it on Monday the 13th, and we had this rally. And I talked about a rally with the inauguration day. Rally, we actually broke out the day before Inauguration Day, that I believe is a continuation of the presidential election rally, which is what we predicted back over here with this bullish divergence right here. And again, I think it's a continuation. I think we've come back up, we filled the gap, and we're now resuming the advance. That's what I think is happening. Now, while I believe that we're going to get a bigger pullback, still in all likelihood, I think it's just that. I think it's a pullback, and I think we will go higher. But 60-minute chart here has really allowed us to make some amazing calls and the turns, the bullish diversions. We call the bottom there in November, the bearish diversions over here. Formed a triangle on the S&P, and I told you if it breaks down, we'll get a bigger sell-off with the Dow and the Russell. If it breaks up, then that sell-off could come to a conclusion. We had a resolution. Our signals remained bearish throughout the triangle. We had the downward resolution with the Fed lowering the amount of cuts, 25, reducing it from 4 down to 2 from the September to the December meeting. And again, some amazing calls, but it was just multiple point bullish diversions that I told you we are likely going to come down, fill this gap at 57.83. That was the presidential election gap. And I told you we were likely going to fill that, hit the 2023 trend line, and probably bounce. Exactly what happened. We got the rally, and as we got the rally, I told you at some point, either just above this high from December or just below it, we're going to pull back and back test to break out of the bull flag. That was correct. We went just slightly higher, and then we had the deep seek gap down. and we didn't quite backtest it. We fell just short of it. We bounced off our 200 period moving average here. We rallied back up to fill the gap right here from the deep seek gap there. Then we get the sell-off today on the tariffs. Now, we'll see if we try to rebound and get a lower high first, if we move back into the pattern. But again, I think that still we're going to end up getting the larger Fibonacci retracement. I could be wrong. This low may hold, but I, again, have the guts to tell you exactly what I think. Very few people will do that. Most people predict things after they happen. When I tell you something, I tell you what I think is going to happen. Over here, I said, hey, we're going to get a presidential election rally. Bullish diversions that set up ahead of the election. Talked about a December sell-off. Talked about the bottom over here before it happened. Talked about the rally, the bull flag. Everybody was saying, no, we have a head and shoulders. We have a head and shoulders. We're going way down. And I said, no. I told you, again, I thought it evolved into a bull flag pattern, and I expected a bounce off that 2023 trend line once we filled this gap. That was correct. I got to tell you, and I told you again over here, predicting that we would get a back test and a pullback. And I told you again, because I was wrong at these other turns, or right at these other turns, doesn't mean I'm going to be right here. I could be wrong about this low being taken out. Told you that's what's going to happen. But again, I told you just my opinion based on what I'm looking at. Still believe that, and I'm sticking to it. All week, even with this gap lower, I've been sticking to it. Don't think the move is done. The bigger picture is bullish, talking about when if we go lower and back test and get bullish divergences forming on the RSI. These bullish divergences, I mean, they've been nailing it. The bearish divergences have been marking the tops. The bullish divergences have been marking the bottoms here on the 60-minute chart. Everybody should have a 60-minute chart. These things are amazing. One of my favorite time frames. Thing here on the MACD, we could roll over, have a, come down, and again, form a bullish divergence here, and actually even get a higher low confirmation on our indicators. So again, like I keep saying, I don't think that this is pullback. I'm predicting that it's now happening. I don't think it's going to take out this low. I think it's going to just back test. And again, my guess is we're going to end up filling the gap at 59.38, which is the breakout of the bull flag, and then maybe hit our 61.8 Fibonacci at 59.09 there. That's gap support right here from this gap, CPI gap higher. Maybe we come back and fill this gap. If we do, then you hit your 78.6 Fibonacci. But again, I don't think this low is going to be taken out, and I believe that this is corrective. Now, Nasdaq still may get a bigger sell-off because, again, it may have already peaked and may stop new highs, although we are not getting confirmation of that on the monthly time frame, but we did get that topping till the previous month, and we're now closing out the month, so I'll take time to show you that as well in this video or my Sunday video. We gapped higher, we came back and we filled the gap, okay, and I think, again, that was probably on the intraday chart here, a gap and trap. And we'll see if we try to bounce, but we have come back and filled the gap higher from Thursday's close at 6,070. And again, watching to see if we still come down here. I believe this is an ABC for wave 2. On this count, I have changed the B wave, extending it higher as we fill the gap. So again, I still think it is an ABC formation. That'll be followed by a wave 3 that will take us much higher levels. Here's the plan. Here's what I'm watching for next week. Okay, I believe we're going to end up seeing a bigger pullback. Sticking by it. I don't think this is the low here, but I don't think this low is going to be taken out. Once the pullback's done, I think we'll resume the advance. The question is, do we throw back into the trading range, or do we just back test? And again, I don't know. I'm telling you that I believe that this thing is not done. I believe that we're rallying up, forming a bear flag, going into filling the deep seek gap up here. I think our first sell-off is surrounding deep seek. I think our second sell-off is likely going to be surrounding the tariffs, or maybe NVIDIA thrown in there as well, and possibly earnings. We're going to get a lot of earnings next week. If you measure the bear flag from the low to the high, and our breach there was at the end of the session, so I marked it from the end of the session, it takes us down towards just beyond our 61.8 Fibonacci measurement of it. Doesn't have to reach it. Maybe it reaches it. It does, it will fill the gap, the breakout gap. It will come back and we'll hit our 61.8 Fibonacci. Maybe, again, we just reached our 61.8 Fibonacci at the 5909 area. Now, hang on, let me change it back to log scaling. That's where that was. Linear scaling, the Fibonacci's are slightly different. It's 5906. With the log and linear, they're just slightly different. Here, I have it back on the log scaling now. And again, looking at the 61.8 Fibonacci, 5909, looking at the 78.6 Fibonacci here at 59 or 58.49, and that's coming in very close to our CPI gap fill down here. Now, I don't know that we reached that level. I told you I thought we would get a back test of the breakout. Told you I thought we'd bottom, rally, but then I told you I thought we'd get that pullback, and we are. I don't believe it's done, and I believe from back test mode, that's what I think is going on. So I think we're going to get an ABC move here, and then I think we're going to resume the advance. Now, again, previously, like in 2018, there was volatility surrounding the tariffs. The market has been shrugging it off, and nothing to see here, don't worry about it. But yet, again, even though the market initially shrugged it off, now we're starting to see some concern. So we'll be watching, do we get a rally back up? And if we do, does this lower high now hold? Or do we just continue downward? And if we do, these are the levels I'm watching. The 61.8 Fibonacci. These are the Fibonacci's, by the way, from when I called the bottom right here to this peak and this pullback. And again, I believe that whole thing is wave 1. I believe this is 2. And then I think we're going to get the extended wave 3 that's going to take us to new all-time highs. This is what I think is going on. This is the levels that I'll be watching. And again, this is called the golden pocket. It's dubbed the golden pocket between the 61.8 Fibonacci and the 78.6 Fibonacci, level that is often reached with retracements. That's why they call it the golden pocket. Buyers could be lurking in this area or at the upper boundary of the bull flag, as I've said. And again, I think is what's going to happen is I think we're going to take out the slow, probably go towards the 61.8 Fibonacci, probably back test. But we could breach this level and move as low as the CPI gap or the 78.6 Fibonacci. I'm not sure that we'd go that low. But again, I want to point out these levels to you to make you aware of them because we could. This is we're going to back test. Probably try to tag the 61.8 Fibonacci, maybe overthrow that level a little bit, fill the gap at 59.38, and then again around that 59.09 area, the 61.8 Fibonacci, or just above it or just below it, or in that area is where I think we are going to likely bottom. Resume the advance to continue and go on and finish the blow off top for the S&P 500. Are you picking up what I'm throwing down? But I think that initially we're going to get volatility surrounding the tariffs. The market will then rally on something else, hopes that situation gets resolved and they end up going away, whatever the case may be. I think we pull back further and then I think we end up going higher. Now, this is a daily chart. I have two trend lines that I'm paying very close attention to. The trend line here in red is from the July peak. That makes up our rising wedge upper boundary. I am becoming more and more convinced that that is probably the trend line that we're going to end up reaching and getting rejection at. Intersects very nicely with the upper channel in the weekly time frame that I've been talking about. But if we overthrow that level and keep going, this is another trend line I'm watching, potentially a channel here in the daily time frame, parallel to this lower boundary. This is the trend line where we bounced off of, and again, I just drew it from this low right here. We slightly violated it, just connecting these two lows right here from the August low to this low right here in January. Take it further back, we just slightly violated it, and that was the 2023 trend line. I told you we got to fill this gap and bounce off of it. Played out beautifully. If we get a bigger pullback, couple things. Let me just bring up my 100 period moving average here. We could be moving back towards the 100 period moving average. We bounced off it over here. We bounced off of it. We could do it again if we pull back here, or we may go a little bit lower and hit the trend line. We'll be watching, but I think we're going to back test this upper boundary. And then I think once we're done, I think we're going to get that extended wave 3, 4, and 5. And again, if we do go above the red trend line from July, then this is a trend line that I would be looking at. My guess is we're not going to do that, but I want to make sure I show you both of those scenarios. I believe, though, we're going to continue we did over here, as I've said, continue the election rally that began over here. And again, remember the bullish divergences I showed you on the 60-minute chart? That was at this horizontal support in July in the 50 period. We talked about that at the time too, and that's why I told you I thought we were going to bounce there. 60-minute charts have made some amazing amazing calls for the market. So this is where I think the blow off top would finish if we overthrew that upper boundary of the rising wedge. But here's what I think is more likely the case, and that is this larger rising wedge rather than a channel. Again, I think that we're going to get the bigger pullback here. And again, maybe we go down and test the trend line again. I told you I thought we were going to bottom at this 2023 trend line on January 9th and 10th. Gap down on that Monday the 13th, the very next day after the 10th, and we hit it, we bounced. Maybe we hit it again. We'll see. It'll be an area of interest on this pullback, and it is intersecting there if we take our time reaching it a little bit with that upper boundary of the bull flag. But this is what I think is more likely. I think we get a bigger pullback, and then I think we come up and we probably hit the trend line, pull back, and then try to hit it again and end up topping out, maybe even overthrow it a little bit. But that's what I think is going on. I think with that, the S&P will end up forming a massive divergence right here on the MACD. Again, before all is said and done, that's what I think is going to happen. Just zoom in here. I can show you the shorter term of what I think is going on here with the wave count. And again, I believe that we've completed intermediate wave 3 and 4 over here. I believe this move up is minor wave 5, or I'm sorry, intermediate wave 5, and unfolding in these intermediate waves, or I'm sorry, these waves, pardon me, these minor waves right here, 1, 2, 3, 4. And that's why I told you I thought rather than a head and shoulders, I thought that was a wave 4, minor wave 4. And I told you I thought we were starting minor wave 5. And again, I think that's being proven correct now. I think we've got minor wave 5 going on here. And I think once we complete that and this 5-leg push higher of these smaller subwaves completing minor wave 5, I think we'll complete that intermediate wave 5, which is the whole thing. And the whole thing from the 5 intermediate waves from the 2022 low, that whole thing is primary wave 5. Been showing you the weekly time frame. This is why I don't think we've topped yet, why I still believe that we're going to get a bigger pullback, and I think the bear flag that formed on the intraday charts and today's reversal bar here on the daily dropping back below the 10, I think is suggesting that. Remember, the 10 got above the 50, the 20 is not there yet. I think we throw back to it, and then I think we get that 20 going back above in a bullish realignment of the moving average trio, the 10, the 20, and the 50. And I think look at where our 100 period moving average is. If with the trend line that we slightly overthrew here, the 100 period is right there. Well, we just violated the 100 period and bounced off of it here. Here, we were just above it. Here, we were just below it. The 100 period is a very important moving average in my mind. Point is likely gravitating towards that 100 period moving average as well. It bounced just above it. The S&P bounced off of it. That's what I think is going to happen. And if we come back where these levels intersect or so, or just below, before that, we'll be around that 100 period. Then I think we can go back up and resume the advance, whatever the catalyst may be, earnings or now hopes that the tariffs go away. But eventually, let me say this, and I've said this for a while. Again, I believe that we're going to have an inflation freakout up at the top. And I think that the tariffs are going to be a part of that. Why? Because Wall Street believes that the tariffs are inflationary. They are not, but they believe that. So does the Fed. So I think we're going to get an inflation freakout up here. Maybe tariffs, we see that bounce with the 10-year yield off the 50-day. We start seeing eventually a topping process come to a conclusion here. I do think we'll push higher, but I think the time is short. This is what I think is happening. Live it, love it, learn it. And just quickly with that gap and trap today, filling the deep seek gap, we've got momentum rolling over here. So again, I think we still get this bigger pullback. My trend line moved on me a little bit. Sometimes this program does that, but I think we get this bigger pullback to this upper boundary. I think we're going to resume the advance. Now, the massive rising wedge here on the daily chart. Here it is in the weekly. Now here's a rising wedge in black, and I think by the time we reach this, I think we're going to be reaching it around the time it intersects with this upper channel line. I've talked about this at great length and detail. That will be followed by an immediate 20% sell-off. Now, I've talked about this 20% sell-off, and again, this is what we've had in the past. It's about the time the Fed panics. In 2001, we got the emergency cuts out of the Fed with that, dropping about 19.5%, and in 2020, we dropped 20%, just over about 20.5%. And again, the same thing, the Fed panicked, and then it gave us a relief rally. In both cases, we got a lower high. Later, when the tax cuts extended and we get new tax cuts in, that will also be a relief rally, just like it was in 2001, a counter trend. We know that the market's going to price. We know we're going to have a recession because reliable recession indicators are telling us that. The Fed dismisses those reliable signals. They can micromanage the economy, and it's just arrogance, is what it is. Talked about again, the elites dismiss it, talking about their soft landing. And if you don't believe that we're going to have a soft landing, then you're just ignorant. If you don't believe that, you're a Neanderthal. If you don't believe the kind of nonsense that they talk about. Gee, we have reliable indicators that have been reliable for decades, and when they flash and say we're going to have a recession, I actually believe them. Nevertheless, I digress. Here it is. Again, the 5 minor waves on the weekly chart. I think we're headed up here, and I think that will complete the 5th minor wave. I think it will complete the 5th intermediate wave, which goes all the way back over here. And I think it will complete primary wave 5, which is this whole thing. And I think that will give us the market top. So much complacency. Oh, we don't have market tops anymore. The Fed won't let it happen. At about that 20% sell-off, somebody was saying, oh, that's going to be it, and then we're going to start the new bull market. They're misunderstanding what I'm saying. They were asking an honest question. That's going to be it. And no, that's not going to be it. That's going to kick off the bear market. That's just going to be getting the ball rolling. And then we're going to have this big rally back up and, claim it's over. Oh, people that are going to be blindsided by it, just like over here in 2022 when we had the 15% drop really fast. They told us, oh, it's an attractive buying opportunity. Hear that nonsense when we get a 20% drop over here. It's going to take us back to this lower trend line. Get a bounce, and then that rally is going to be sold, and we're going to go make new lows. My guess is that we are not done yet. Again, I'm basing that on several things, but I think this is going to come to a conclusion in the coming weeks ahead. For